What's going on, everybody? Liam O'Reilly, Vermont economic realtor. Hope you're doing well with all the banking turmoil that's going on. The Silicon Valley bank collapse, Credit Suisse, Signature Bank, and now Deutsche Bank looks like it's in trouble as of today, which is March 25th, 2023. Is now a good time to buy a residential real estate property to get into the market as far as residential real estate goes. We are going to get into that today, as well as a few other topics. Before we do, I just wanted to say thank you to all the new subscribers. Thank you to all my subscribers. I'm at 118 as of this recording, which is amazing. Very, very grateful for you folks. A few of you have reached out directly and have commented on the videos, and I really appreciate everything. So thank you. Let's get into the video and into my opinion on things. So we're going off of this article, this Forbes article. Will the Silicon Valley Bank fallout collapse the housing market? Now I'm going to scroll through a few different topics that they point out in this article, but the big story is that this current crisis, this banking crisis, is different than 2008, where 2008 was led by the mortgage-backed securities, led by bad loans, which, if we go right here, the infamous ninja loans, no income, no job, no assets. And a lot of banks held mortgage-backed securities. A lot of people bought mortgage-backed securities with that were comprised of homeowners that, had these ninja loans, no income, no assets, no job, and they were still buying massive properties. At the same time, building was on a huge run up, so there was a lot of supply throughout the market. Now, in the current market that we're in, interest rates are a lot higher and affordability is at an all-time low, but we're coming off 10 years of low building, of not much building in the real estate market. Obviously, we just had a few years of parabolic prices, but at the same time, the financial conditions are a lot different than they were in 2008, where in 2008, that recession was led by residential housing, that collapse. But what's going on in the banking system now? What is happening to these banks with these failures, at least here in the U.S. I'm a little less familiar with what's going on with Credit Suisse and Deutsche Bank. And in my mind, it seems like there are larger economic forces at bay when you look at the Treasury yield curve and you look at some of these warning signs in the broader financial economy. It seems like there's other forces at play, but as far as I can tell, all the systems don't point to residential real estate. So, going back to this article, pointing out some of the points that they gave, which I agree with. They talk about how the banking collapse, with these higher banking standards, are, the issue that banks are feeling right now is different than failure, defaulting on mortgages. Is different than a massive increase in foreclosures. The assets that they hold, the mortgage-backed securities, have dropped significantly in price, but that has to do with the extreme hiking of interest rates as opposed to people not paying their loans. So although the value of mortgage-backed securities have gone down, it's really a result of the broader rate hikes that the Federal Reserve has done and other central banks across the country have done, making those cheaper mortgages less attractive. So as more banks start to experience trouble, and I'm going to make another video either later today or maybe tomorrow about the commercial banking market, which I think is a really, the commercial banking sector was showing signs of cracking with these higher interest rates. And then on top of that, when you realize how much of the commercial banking sector is held, how many commercial loans are held by small regional banks that are already experiencing stress because the value of their assets have decreased, just like Silicon Valley Bank. You can really see where the commercial sector, there's a lot of risk in that commercial sector, which is going to, could potentially cause more bank failures into the future. So with all that economic uncertainty and with the more potential bank failures coming into the future, especially if the commercial real estate market outplays or plays out like like a lot of people are predicting, like I think it's going to play out with, foreclosures, with, these assets being reevaluated at these higher interest rates. How does that play into the residential market? And should you buy a home right now if you are thinking about buying, or if you're a seller, should you sell right now? In my opinion, if I, I can't tell you whether to buy or sell. Obviously, that's a personal choice, and it depends a lot on your life circumstances. But how I think you should think about it is you have to assess what is going on in the broader economy, and what are the risks out there, and how are governments, how is the US government really, if you're a US based home buyer, how are they going to respond to these financial struggles and the financial hardships that could be right around the corner? In the recent Federal Reserve speech, they talked about how unemployment the unemployment rate could snowball and run away. They're hoping it's going to be at 4.5%, but they really have no way of estimating that and no way of stopping it if it runs away. So, with potential economic turmoil on the horizon, how do you think the government is going to respond to that? And when I look at everything, when you look at these bank collapses, when you look at the U.S. debt, when you look at all the issues that are happening in the economy, I think that it's more likely that the Federal Reserve is going to cut rates to help solve these issues, to help, bail out these banks, to increase the value of their assets, so we don't experience massive bank runs, or they don't lose a ton of money and fail because commercial real estate, the values of commercial real estate have been reassessed. I think it's more likely that we're going to see rate cuts by the Federal Reserve, more printing by the government, and more inflation as far as the, increasing the debt limit. We're already seeing inflationary measures. Even though the Federal Reserve is tightening, they're losing money at $120 billion per month as of the most recent months, which in my mind is just, it's just pumping more $120 billion into the system as opposed to taking it out. So I think as these issues take place and as we see cracks in the system, instead of letting the whole system fail and letting massive, having massive bank failures, having, the U.S. government, for instance, default on its debt, I think what's going to happen is, the debt ceiling is going to be raised, and the Federal Reserve is going to be forced to cut rates and increase inflation, and there's going to be more inflation. There's going to be cheap money again, and there's going to be more inflation as we move into the future because our economy just can't handle these higher rates. That's what I personally think is going to happen. Now, if you think that everything is going to fail and that these, maybe the Federal Reserve will cut rates, but the unemployment rate and the overall economy will still be too weak, and we're going to see mass foreclosures and mass inventory on the market, or at least in your market, then you should probably wait and you should probably not buy a home. Now, if you're thinking about selling a home and you're going to sell and try to time the market like that, then yeah, you should wait and time the market. Personally, I don't think that's what's going to happen. I think that now is a good time to get into the market. I mean, it might even be, it's tough because now is still a tight inventory market to sell. But if the Federal Reserve cuts rates and rates shoot down, we could be seeing a better time to sell in the upcoming future. At the same time, on the same note, if rates do come down, then we're going to see those move up buyers move back into the market, and we could see more inventory come to the market. So, as far as buying and selling, I think, if you're considering selling in the next few years, then now might be a good time, but your time to sell is probably going to be, pretty stable throughout the next few years. Of course, unless you think the whole system is coming down and it's going to collapse. But if you think that inflation is gonna run off, as I do, I think basically instead of solving these issues and by trimming the fat, by burning the dead wood, by letting these systems, letting these banks fail, I think what's going to happen is our central planners, the government, the Federal Reserve is going to print money, is going to cause more inflation instead of failing the system, which is going to cause these assets to shoot up in value even further than they are. And so, I am actively in the market. I am actively trying to allocate my resources into scarce assets, into real estate, into silver, into precious metals, because I think that the solution that the government isn't going to let these companies fail, at least not yet. And we're going to see more inflation. We're going to see more money. We're going to see these asset prices shoot up, especially in the market that I'm at, where here in Vermont, where their supply is so low. So I'm going to leave this Forbes article in the description for you folks. You can read it as well. These bank failures they're not caused by people not paying their mortgages like they were in 2008. It's really a different type of failure. Regardless, we're still going to experience economic turmoil. But because of that, I think interest rates are going to come down. More money is going to get pumped into the system. There could be more competition for these homes. I at least around where I'm at, inventory is so tight that if rates come down, even if the unemployment rate rises, we're still going to see more competition for these properties, and values probably continue to go up. So I'm going to leave the articles in the descriptions. Let me know what you guys think. If you're looking to buy or sell a home here in Vermont, I'd be happy to help you. Reach out to me directly, or if you're looking in another part of the country, reach out to me. I'll help you find a great realtor. Leave a comment. Let me know what you think. I love hearing your folks' opinion. Again, thank you all for the subscribers. I'm very grateful. I'm honored to have you listening to me and hearing my opinions on these matters. And I love hearing your opinions. So let me know what you think. I'll see you guys in the next video.